So thank you all so much for being here today. I really appreciate it. We did get more guidance this week. It didn't tell us a ton of new stuff, but hey, at least it came out, right? They said that they were going to be releasing guidance as soon as possible, and they released guidance pretty quickly. So I have some things that I want to cover in terms of what the new guidance tells us, what it confirms. But as is often the case with our sessions here, I really want to talk about what we don't know yet. So I'll spend a little bit of time going through what we do know. I have a few recommendations that are new since last week. And so we'll go through those, and then I'm going to spend more time talking about what we don't know. My guess is that when I go through the section of what we don't know, it's going to answer most of your questions, because most of your questions are going to be, but what about this? But what about that? And I'm going to say, well, yeah, those are the things we don't know yet. So I am going to get started here. I wanted to point out something that is sort of I don't know if it's a disclaimer or a complaint, it's both, which is that this week, I've taken 3 webinars on the new PPP forgiveness rules and gotten not just 3 different interpretations, but not one single one of the webinars that I took was 100% accurate. As a matter of fact, I just finished one that ended at 3 o'clock, and I'm super riled up, and I'm pretty sure that I need a cocktail, because there was and this is a nationally well-respected company that does CPE, a presenter that I really has got a good name, and he said so many things that were wrong that I just kept yelling out loud, and so it's important to remember, and this goes for me as well. I am only an expert. I am not the expert. Nobody right now is the expert. Every single webinar that I take has got some piece of misinformation that is so deeply disturbing that I hope I'm not giving deeply disturbing misinformation here. I hope everything that I say is correct, but please take it all with a grain of salt. And if you have an interpretation that makes sense to you and I'm disagreeing with you, or anything that I say in this call does not, meet your understanding, please shoot me an email afterward, because I want to make sure these get better every week, not worse. I don't want anybody to be coming away from one of these the way I just did with Kevin. So that said, I should say that the one session that I am doing every week that is always helpful to some extent is the AICPA Town Hall. The American Institute of CPAs has been doing an amazing job with this. And I think the reason that they're doing a better job than everybody else is that they actually get to sit in on the Treasury briefings every time that they happen. They actually have a representative, because they're lobbyists, as well as information for all of us and education for all of us. They actually are lobbyists, so they get to sit in. They have the respect of Treasury, so much so that actually this last week, when Treasury was doing their briefing, they referred to the AICPA forgiveness spreadsheet as the gold standard. So that's something to keep in mind. Basically, if they have an opinion on something, it's probably accurate. So I attended the town hall meeting yesterday, and here is what they had to say. Some of this is a review from our webinar from last week, from our Zoom session from last week. But the parts that we're reviewing are actually kind of a relief to me, because it means that when Treasury came out with their new guidance late on the 10th, they confirmed a lot of things that we were expecting were the case. And it's important to remember that the AICPA, the resources that they're offering are not behind a paywall. Those are accessible to everybody. I link to them frequently on my blog, and I'll actually be pulling up as a screen share their most recent summary of the Flexibility Act, which has been updated since we talked about it last week. So what did they tell us? What do we know? Treasury statement came out on June 8th, and more guidance was released the night of June 10th. And the biggest thing there is that the 60% cliff has been fixed. I'm sure you all know this already because it's huge news. But even though the statute was written to say that you have to have at least 60% or you're not going to have any forgiveness, because that was not the intent of the people writing it, of the legislators. Treasury somehow was given some sort of okay to decide that it's not going to be treated as a cliff, even though it's written that way. It's going to be the same kind of thing as it was before, when 75% of your forgiveness has to be spent on payroll, and it would phase out if you did not hit that 75%. That is the way the 60% is going to be treated. So that's huge and wonderful news. They did not have to issue a technical correction, which is kind of amazing. It's not kind of amazing, it's just amazing. Secondly, the extension to the 24-week period of time is automatic. You do not have to file an extension yourself. You do not have to elect 24 weeks. It's going to work the other way around, where 24 weeks is going to be what they're presuming you're going to do, and you have to elect 8 weeks. So that is another really kind of take a deep breath confirmation of something that we had presumed but we weren't sure about. I had quite a few people, clients who were coming due this week, who were, asking me, do I have to file an extension? And I was like, no, because there isn't one to file. So I hope that this works out okay. And they clarified that that is in fact the case. The interim final rule that was released on the night of the 10th does not address FTEs, okay? So as written, and this was a concern in last week's call for a lot of people, and this is the biggest concern I have right now, because it kind of makes this big PPP Relief Flexibility Act not as useful as I want it to be, which is that in not addressing FTEs, it means that if you are not trying to apply the safe harbor for FTEs, which is now December 31st, and you are not trying to use the exemptions from the FTE reduction, then you really do have to keep your FTEs up for a full 24-week period. So that's not going to work for a lot of people. And so for folks who can't take advantage of any of those, if they can't meet the 24-week FTEs, if they can't meet the safe harbor, or if they can't, and these are all ors, these aren't ands, or if they can't meet the exemptions, the recently expanded exemptions to that FTE reduction, they are definitely going to want to pick that 8-week period of time. So there are a lot more people that are going to be voluntarily hoping for that 8-week period of time, not hoping for, but electing that 8-week period of time than we previously thought when this first came out. It's very important. You may not use the old application. So if you're wanting to file as soon as possible to get forgiveness, a lot of people are wanting to do this because if they already met maximum forgiveness by jumping through the hoops and they were able to satisfy the original rules, then they might want to apply for forgiveness immediately, because what does it do accounting-wise? It's pulling it off your balance sheet as a liability and putting it into income. So let's say that you want to apply for other loans. You need to have as strong a balance sheet as possible. You need to have your retained earnings be as high as possible. And so you might want to apply as soon as possible. Don't use the old form. Throw away the old form. They did come out with a new one. There's no guidance to accompany it yet, but they did come out with a new one. It pretty much looks just like the old one, but they've said, please don't use the old one yet. Some banks are saying, hey, go ahead and apply now if you know that you met all the requirements and your 8 weeks is up and you know you're going to elect the 8-week period. Use the new forgiveness application that came out. They do expect that there's going to be a simplified application released at some point for companies that have no employees. I'm skeptical. I mean, SBA has taken forever to actually give us what we have so far, so that's hard to imagine. But even if they don't do that, AICPA is going to for sure be releasing a spreadsheet for folks who don't have employees, and that's going to be greatly simplified. So if you are one of those folks, it might be worth waiting for that to come along before you apply for forgiveness. You do not have to wait until the end of the 24 weeks to apply for forgiveness. If you meet the requirements and are electing the 8-week period of time, you don't have to wait. And here's a big question that I had. I was a little worried that if you elected the 8-week period of time instead of the default 24 weeks, if you elect the 8-week period, are you going to have to hit the 75% of the forgiveness applies? No, it doesn't. It's 60% for everybody, even if you're electing the 8 weeks. So that part is a big relief. We didn't think that was going to happen, but it was a possibility. So a few things to keep in mind. They are trying to get every loan forgiven as much as possible. So it's extremely likely that any new guidance that comes out will be lenient. There may actually be more relief coming from Congress. There are some lobbyists who are asking for anything under 100,000, 150,000, or 200,000. Different lobbyists are giving different numbers to just be automatically forgiven, because the banks do not want to have to file all of this paperwork to get this teeny little 5% application fee, right? It's not in their best interest. And so they're the biggest lobbyists for this. Unfortunately, the various organizations that represent accountants are not lobbying for that, because most people are charging their clients for this kind of stuff. So that's pretty offensive. So if you have any opportunity to weigh in on this, you know, we would really love for those loans to get automatically forgiven. You can reapply for PPP if you returned the money because you were freaking out about the concerns that you were not going to be able to meet the needs test. And then the day before that money had to be returned, they said, oh, by the way, if it's under 2 million, don't worry about it. You'll automatically meet the needs test. A lot of people had already returned the money who really didn't need to return the money. You can reapply. Just get back in touch with your lender and say, whoopsie. Didn't mean to do that. And the other thing that you can do is if you didn't get full funding, you can go back to your lender and apply for the difference. Okay, so this happened with a lot of partnerships, because initially they said you need to apply as a partner, as you apply separately as a self-employed person, and the entity, the partnership, would apply itself for the PPP. And so they got the funding for the entity. And then when they went back in to apply on their own as self-employed people, the rules had changed retroactively. Woo, ha, ha, ha. Joke's on you. And so they didn't end up getting the portion of the PPP that was allocable to their own compensation. So they have made it clear that you can go back to your lender and reapply for the difference there. Two big things that I want to mention that are not directly related to PPP, but they were. There was guidance did make it clear that I should be making these recommendations, which are the payroll tax deferral. I mentioned last week that the payroll tax deferral, this is not the employee retention tax credit, that is still mutually exclusive, but the payroll tax deferral, and this is the deferral of the employer portion of the Social Security taxes, so this is 6.2%. You can not pay it right now through December 31st, and then pay half of it December 31st of next year, 2021, and the other half of it December 31st, 2022. And what I had said last week, because this was the AICPA's interpretation and it was made clear that this is not the case, I had said you could only do that payroll deferral, the payroll tax deferral, until the end of your forgiveness period. That is not correct. They have made it clear that you can actually do this. We're just like everybody else. So my recommendation is, there are very few situations where I can imagine this wouldn't be a huge help to a lot of small businesses. And so I am recommending that everybody who can do the payroll tax deferral, do it. It's probably in your best interest. And there are going to be some people who are really nervous about taking on extra debt, and I understand that. But we're talking about a repayment date that's extremely far into the future. And as long as you are still in business, it's very likely that eventually you'll be able to hit that repayment date. So they did, to clarify, remove the interpretation that said you can only do that through the end of your forgiveness period. You can do it through 12/31, just like everybody else. So that's a big takeaway, I hope, from this meeting. Secondly, and again, this is actually not has anything to do with PPP, which is that economic injury disaster loans. On the 10th, Secretary Carranza indicated that they are going to start accepting new applicants again next week. So if you didn't get the EIDL first time around and you are interested in it, because right now it's only open to farmers, but they're reopening that at some point next week, so keep that on your radar. What we don't know, okay? Owner compensation limits. Extended to 24/50 seconds of 2019 or not? We hope so, but we don't know yet. So I can't give you an answer on that because we're waiting for guidance. This is huge. And so big question that we just don't know the answer to. So don't ask me in the Q&A session because I don't know. Will the FTE reduction rule remain in place as is? This is something I was talking about earlier. It was hard enough for clients to keep average FTEs at 100% of their comparison period for 8 weeks. But 24 weeks is going to render this like flexibility completely useless. So again, I want to go over those alternatives. The alternatives are you have your safe harbor of 1231. There's no, as of now, there's no requirement for how long you have to have people rehired for in order to meet the 1231 safe harbor. So you might just say, okay, you know what, I'm going to save this amount of money up. And if it turns out that I have jumped through all of these hoops and not hit the required FTEs, then I'm going to at least hire everybody back for one paycheck, okay? I don't know if those rules are going to change. This is a bit dangerous to plan on, but the safe harbor is 1231, and a lot of people have a busy period, you know, in that last quarter of the year, and so it is possible that a lot of people are going to be taking advantage of that. Another alternative, though, and this is something that has become more and more and more important since our session here last week, which is the FTE reduction exemptions have been greatly expanded. And so there is the possibility that you'll be able to add a bunch of people back in. I know Chicago has all sorts of rules about when you reopen, you can only reopen with your capacity at such and such. And that goes for retail stores, that goes for restaurants. There are a lot of organizations that will benefit from that. And so I'm kind of relying on that for a bunch of my clients right now, saying, hey, are we going to be able to add back in enough FTEs because we have a state or a city mandate for capacity controls? Also, there's a mandate that the employees have to have social distancing, right? And so if you don't have a large enough place for them to physically be able to do that, I have one restaurant in particular that actually is having their staff work 24 hours in staggered shifts so that they are never 6 feet, less than 6 feet away from each other. And so there's no way for them to make a really, really big difference. So I'm looking at every single one of my clients with that in mind. Another thing that we don't know is what we were just talking about with the FTE reduction flexibility, if the agency, right, the state or the or OSHA or the city is saying that you have these restrictions, then that exemption will apply. But what happens if you're allowed to open up at 100% capacity, but you can't because you don't have enough business and you just can't hire everybody back because you don't have enough business coming in to give you that money to be able to rehire them? That is outstanding. We don't know because currently the way the guidance reads is only if it's by the agency telling you that you can't do it. So I would really like to see more guidance on that. That kind of expands the expansion to the exemption there. FTEs. I've had a conversation with one of my colleagues that the shortcut calculation for 1.0 FTEs for anybody who's 40 hours or more versus 0.5 for anybody who's less than 40 hours a week. My understanding from most of my colleagues and all of the webinars that I've taken is that that still has to be calculated on a weekly basis. But I have one colleague in particular who's saying, no, if there's anybody who's full-time who works at any point during that 24-hour period or 24-week period, you're going to be able to take up 1.0 for them. And if there's any part-time person who works at all 1 hour in that entire 24-week period, you're going to be able to take a 0.5 for them. Now, if that's true, all of these concerns about the FTE rules are out the window. I don't care. I mean, I don't have any client who wouldn't be able to hit their FTE requirements if that alternative is in fact interpreted that way. Again, this is one colleague who suggested it. I asked this question in a webinar earlier this week where that person agreed with that interpretation, but they made so many other mistakes in answering other questions. They didn't feel like I could really trust their saying, yes, that's going to be the case. And I am going to continue to submit this question at the AICPA Town Halls every week until I get an answer. So keep in mind that might be a possibility out there that would really benefit all of us, but we don't know whether we can take it or not. We need more guidance there. So we have all of us have a lot of clients who did not apply for the PPP before for whatever reason, and so they took the employee retention tax credit instead. Well, now that there's this 24-week period, they're like, ooh, never mind, I don't want to take the ERTC, I want to go apply for the PPP. How can they back that out? Is there any way to say no, never mind? I have asked a lot of folks this, and the answer that I've gotten is, well, they're not allowed to do both. If they took the ERTC, then they're not eligible for PPP. Well, maybe they could do an amended 941 and rescind the credit. Maybe get in touch with their payroll provider and say, hey, I changed my mind. You know, if they haven't filed their 941 yet, maybe the payroll provider can back that all out before that 941 gets filed, right? So there are some options out there. I haven't heard any helpful information from colleagues or AICPA about how that could be handled. But keep that in mind. You might have some people out there who took the ERTC. I personally decided I contacted Gusto, which is the main payroll company that I work with. There is no accountant report that will tell you about the payroll deferral and the ERTC, but they did walk me through where you would find out that information. And I took a bunch of screenshots when I did it, and I'm going to write a blog post about how to go through and do that in Gusto. I recognize it's not the only, you know, payroll company out there. I'll get around to ADP and Paycheck someday, but I don't have a lot of clients on there. And so I actually had one of my bookkeepers go through every frickin' single client of mine in Gusto to see if they had elected the ERTC or the deferral. She made a little spreadsheet for me. And so for those who are claiming ERTC who might want to be able, you know, might want to do PPP, I'm going back and getting in touch with them and suggesting that we maybe reach out to Gusto and have them back that out. And for those who did not claim payroll tax deferral, I'm getting in touch with each one of them saying, hey, you might want to consider this. Let's talk about the pros and cons of that. So that blog post will be coming hopefully before the weekend is out about how to go through and do that, whether it's for yourself or whether if you're an accountant and going through and doing it for each one of your clients. There's no benefit to being an accountant here. There is no report, although I have asked them for one, so maybe at some point it'll show up. And then last but not least, and this is super, super, super horrible news, it's looking more and more likely that the EIDL, the Economic Injury Disaster Loan Grant Advance, is going to have to be subtracted from PPP forgiveness, even though the CARES Act makes it clear that if you got it after, I think it was April 6th, if you got it after April 6th and you did not double dip with the PPP, you used it for, let's say, inventory or professional services or something that's not covered by the PPP, that you shouldn't be penalized for that. However, it's because of where it says on the application that it has to be subtracted. It says if applicable. And so a lot of us were saying, oh, well, no, that's only for folks who double dipped, or that's only for folks who got it before April 6th. But AICPA is saying, technically on their summary, their old summary, it said we were waiting for guidance, even though no new guidance has come out since their original summary of this Flexibility Act. They have changed their summary to remove that section saying that more guidance is needed on that. And when I asked them at the town hall, they did answer that question. I was not the only person asking it, and they took the question and said you're going to have to subtract it. So I recognize that that is not what the CARES Act says. And I recognize that AICPA could be wrong. I recognize that you could decide not to subtract it from forgiveness when applying with your lender and hope that SBA doesn't notice, or hope that if SBA does notice, that you're able to go back to them and say, but look at the CARES Act, it says this, which is not the same as the way you're interpreting it. But it's getting riskier and riskier to take that approach. So it is looking very, I think that we should all plan accordingly, plan that that EIDL grant or advance is not going to be forgiven. And if it turns out, we find out later that it will be forgiven, bonus. So I'm going to share my screen and pull up the most recent summary of the Paycheck Protection Program that the AICPA has given us. Can I get a thumbs up that everybody can see this? Great, fantastic. So there we go. They link to the legislation and they link to the statement. They don't link to the newest guidance, the guidance that came out late on the 10th. My guess is that they're going to come out with another summary soon that links to that, but you can find it yourself. I'll have a blog post with it up soon. They mention here that the current borrowers have the option to extend the 8-week period to 24 weeks. We've already talked about that. But this language isn't exactly correct. As I said before, it's actually going to be a default of 24 weeks, and you're going to elect the 8-week period. So they haven't updated it yet to explain that, because that's from the newest guidance, the stuff that came out on the 10th. I keep saying on the 10th, but honestly, I mean, it came out after I went to sleep, really was on the 11th. New borrowers have a covered period of 24 weeks. Okay, so if you haven't gotten a loan yet, you don't get to elect that 8 weeks. That's only for people who already got the loan. The 75% payroll expenditure requirement is reduced to 60%, and it is not a cliff. Very, very important. We're all really nervous about that. You have the opportunity to avoid the FTE reduction penalties if the headcount is restored by December 31st instead of June 30th. So this is pretty important here, because one thing that we don't know is if you are electing the 8-week period, can you continue to use June 30th as your safe harbor date or not? Because if you did all of your planning around being able to qualify for the safe harbor on June 30th, right, then it doesn't do you any good whatsoever if they give you December 31st instead. So that is one thing that we don't know yet. We're waiting for additional guidance. AICPA is thinking that it is likely that this will be an option, but we don't know yet. There are new exceptions for FTE reduction provided if you can, and we discussed this last week, if you can, if you're unable to rehire individuals who were employees. So this would be, for example, if somebody doesn't want to return to work. That was pretty much something that we knew before, but they clarified that. Or if you can't hire somebody who is similarly qualified, if you have a specific kind of work that you need somebody to do and you cannot find somebody to do that kind of work, you just need to make sure to document those things. Or, and this is the thing that I'm really putting all my eggs in this basket for people right now, if you're unable to return to the same level of business activity as before February 15th due to compliance with requirements established or guidance issued related to COVID-19. I'm hoping they expand that to be if you just had a drop off in business because of COVID-19. But right now we've just got if there are requirements or guidance issued not allowing you to. The repayment period is extended to 5 years for new loans. And if you already have an existing loan, you can go back to your lender and negotiate with them to extend it to 5 years, but the default is going to be 2 years. Interest rate is going to remain at 1%. PPP borrowers now get to do the deferral, that's 6.2% of employer Social Security payments, just like everybody else. That's something I'm really highly recommending. I can't say that enough. Loan payments are deferred until the SBA determines the amount of loan forgiveness and remits to the lender, okay? So it had only been a 6-month deferral, and now it's when the loan forgiveness actually happens, that is when the loan payments would start being required, or 10 months, whichever is sooner. It doesn't mean you can just never apply for forgiveness and never have to pay the loan. Legislation didn't address the tax deductibility of expenses paid with a forgiven PPP loan. That's still out there. And they go through in here what we don't know. Obviously, my list of what we don't know is a lot longer than this. But they cover the FTE reduction safe harbor date of June 30th that we just talked about. No reference made about the salary and hourly wage reduction calculation in safe harbor, whether anything there changes, and whether or not we're going to do 24 50 seconds rather than 8 50 seconds. I have seen folks arguing for sure that it's going to be still remain at 8 weeks. I've seen folks arguing for sure that it's going to be 24 of 52. So I think we don't know is the answer there. So we've got 6.5 minutes left. Does anybody want to ask any questions? My preference is if you can unmute yourself and just ask, that would be great. But if not, type it in for whatever reason, feel free to type it in the chat box, and I'll do my best. I know there are questions.
I have a question.
Yeah, go for it, Joanne.
Have you, even though you didn't cover it, have you been following the EIDL?
Yeah, definitely.
As the PPP? Yeah. So I got a newsletter from a dental CPA firm today recommending to their clients that most likely they should just return the EIDL. Because the EIDL is not going to allow owners of, S corporation shareholders to take owner distributions.
No, I don't think that's true. I totally disagree with that. That was actually in one of the webinars that I've done. Because the EIDL is a working capital loan. So this is something where we don't have to look at COVID-19. We can look at the history of the EIDLs. And in the history of the EIDLs, S-Corp payroll and S-Corp distributions have in fact been allowed for EIDL because it is a working capital type expense. If you would normally be issuing S-Corp payroll and S-Corp distributions anyway, if that is a normal part of your business, then yes, EIDL should be able to be used for that. I am not recommending anybody return their EIDL unless they only did it because they wanted to get the grant advance, the part that is automatically forgiven, because that's now going to be very likely subtracted from PPP forgiveness. There are a lot of people who can't afford a loan right now, and they're like, forget it. If it's going to get subtracted from forgiveness, then I don't want to spend it. I want to return it. But that would be the only situation. If you got the EIDL because you were planning on using, pretty much the only thing you can't use for EIDL is converting existing long-term debt, right? They don't want you taking something that you are paying 4.5% on over a period of 25 years and converting it to a, 3.75%, I think, for the EIDL. So that's pretty much the only thing. I totally disagree with that interpretation about S-Corp distribution.
My client's loan agreement specifically says no distributions and no transfers to related parties.
Your client's EIDL loan with the bank?
Yes.
Yeah, my guess is that is lender specific then, because in the history of EIDL loans, because it's a working capital loan, if you are already, let's say that you're doing tax distributions on a quarterly basis and that this is something that's in your bylaws. I have a lot of folks who do that. The EIDL would cover that. So if it's in, Leslie, that's actually a really great point. Read the fine print in your lender's agreement and see if it allows it or not. And if it does not, my perspective would be if it does not specifically disallow it in there, and if it is already, you would have to, you know, illustrate that this is already a regular part. You know, you don't want to take the EIDL so you can pay all these huge distributions that you're not in the habit of doing. But if you are in the habit of issuing regular distributions and it's not specifically prohibited, I would say go ahead and do it.
It really bootstrapped them because they were taking distributions, so now they had to gross up their payroll. You know,
right. Yeah. I mean, you know, payroll is a safe thing to spend any sort of funds on, whether it's EIDL or PPP or whatever. So, you know, I would always vote for payroll, but those tax distributions, those quarterly tax distributions are really common in both S corps and partnerships. So I would argue that. Carrie, I think you had a question.
It's not PPP related though, so.
It's okay, you can ask whatever you want.
Okay, I was just curious, what exactly is going on with sales tax deferment?
Sales tax deferment is to my knowledge in the state of Illinois still going on, but I did have 2 clients recently tell me that they got notices about it, and I don't know, you're not one of those 2 clients, so.
I haven't got a notice, I'm just, you know, trying to.
I have no updates. The 2 clients who got in touch with me about it, you know, I was just like, you know, get back in touch with the state and say, no, I'm not paying my sales tax right now because of this deferment, and see what the state says. It's extremely likely that they were automated notices that they received.
Okay. Because we didn't have to apply for the deferment, right? It was just an
Nope.
automatic deferment.
Nope,
Okay.
you just automatic.
Sure.
Just automatic.
Cool.
Yeah, for restaurants, to clarify, which you are, so you're good. Yeah. Got just over a minute left. Anybody?
I have a question.
Yeah.
So I have a bunch of clients that applied for the EIDL loan early on, but they did not ask for the grant portion of it, and they have still not received any communication about the loan. Do you have anyone that did not ask for the grant that actually got the loan?
Yes, absolutely. I have actually quite a few clients, and weirdly enough, I had one 2 days ago that applied. I believe, if I'm remembering correctly, they applied on April 8th, and they got it yesterday or the day before.
Okay,
so it's still out there. The secretary has said that they're still in the queue, and that they're just working through the queue. And it's weird because it just shows up. It just shows up, and you're just like, okay, it says SBA space TREAS. I think that's the EIDL. Yeah.
Right.
So they're still coming. They're still coming.
Okay, good.
All right. Well, thank you all for coming. It's always so good to see you.